Well, we have Rajendra Gandhi. He's the managing director of the company. Rajendra, good morning and thanks for taking the time out. It's been a fairly steady quarter for you. We are certainly seeing a double-digit growth in your top line. Margins have also expanded on a year-on-year basis. What are the prior products that are in fact driving the growth? And what is it that's led to your net profit, that is your bottom line, remaining flat? If you could take us through these factors.
Yeah, good morning and thank you. Our revenues are seeing double-digit growth, and as the festive season approaching, we are seeing strong demand coming in. The bigger growth drivers have been our appliances. Of course, we also continue to grow in our other categories. The retail channel, the e-commerce channels are growing faster than the rest of the channels. So overall, and so we also improved on our gross margins. The difference in accounting, because of some of our assets are go through the lease accounting, and in the short term there will be some pain for the initial years, but then in the long term is positive for the company. We also have some tax advantage. So that's why you will see a better improvement in EBITDA, growth in EBITDA, but at the PAT level, it's almost flat. But as the EBITDA grows from here, the overall lease accounting impact remains at the same level. And so you will see improvement as we grow from here.
Mr. Gandhi, good morning and thank you so much for joining us today. Season greetings to you and everybody at Stovekraft. It's Puneet this side. I just wanted to start the question before coming to Q2 in general. Talk about the festive demand. How have you seen, the Navaratri as well as the Dasera period? And starting October, have you seen an increase in walk-ins? What's been any kind of outlook that you can give us for the festive demand?
Yeah, the festive demand is built in both in the September and October months, but the October month seems to be more promising than the September month. Of course, at our retail stores, we see more walk-ins, and there is good tick even in the e-commerce channels.
Rajendra, can you tell us about the product ranges that you are looking to launch going forward over the course of the next 6 months? What can we expect? What kind of traction can they bring to your overall volumes and the top line?
The focus is on building. We already almost completed our cast iron foundry, so we believe the future for cookware is going to be driven by the cast iron. We are very positive about this, and our completely automated state-of-the-art factory is almost ready. It will start rolling out products from this month, the month of November. So with that, on the cookware side, we are very positive. We have built up some capabilities in the different coating in the cookware for exports as required by our customers, and we'll start seeing revenues coming from the fourth quarter. And we are also talking to some new large global customers. We have finalized the orders with them, so this all will start in the next 2-3 quarters. And the appliances, of course, as we make more and more appliances within the factories of Stovekraft, we are seeing good growth because we are able to control costs, supply chain, and deliver products to our consumers, deliver real value to our consumers. So the appliances category is growing much faster for us. There are a range of appliances, including we are adding new ranges in our air fryer. There is a large range of vacuum cleaners coming in, and we have identified some new products which will follow in the few quarters. So the appliances is going to be the larger category for us.
Just following up and continuing this, point, Mr. Gandhi, that you said about appliances. Now, in Q2 also, we saw 20% growth in small appliances, while induction cooktop is slightly smaller in terms of revenue for you, around 12%. Both these segments have grown very well in this particular quarter. Appliances you did mention on cooktops, as well as anything that you can mention on pressure cookers as well. That's your top 2 segments. Talk us through what has been the growth in these 2 segments specifically. Also, like within small appliances, you did mention air fryer as a new segment, and which has been doing very well as well. Is the margins much higher on those kind of products? Just talk us through a little bit on within small appliances also, what is driving the growth?
So the way we do business is initially we trade in products, bring the product to the market, then assemble them, and then get into complete backward integration. all those categories where we get into the complete backward integration, our margins are a little higher than the phases in the later phases. So several of these categories you will see in the following quarters that we are getting into complete manufacturing of these products, and so you will see a little tick up in the overall margins, right from gross margins, which will flow into the EBITDA. Of course, the appliances is going through that phase 1, 2, 3. Several of these categories will get into phase 3 in the coming quarters. So that's where we see improvement in our gross margins.
Just within appliances also, because you have quite a few brands. I think Pigeon is one of your main brands that you operate, but you also have Gilma as well as Black Decker. Has the main contribution of growth in the first half been led by Pigeon as well, because it's more value conscious, as well as newer products and categories that you're entering with this brand? So is it the Pigeon brand has been driving the growth? It's also a traditional business of yours, of course. But if you could tell us something on the other two brands also that you operate, what's been the outlook and the growth in this particular year, and what's the expectation?
The flagship brand continues to be Pigeon, and almost more than 95% of the revenues are coming from Pigeon brand. And the growth, so the larger part of the growth will come and continue to grow in the Pigeon brand. Of course, these are at different levels. The Gilma and the Black & Decker are at different levels. Black & Decker is our licensed brand. We grow there, but the revenue size is relatively very small. Both these brands put together only contribute 5%. So the larger growth is coming from the Pigeon brand.
All right. Rajendra, I want to understand how you are looking at developing and adding new stores to your current retail line. We understand you currently have 22 stores. The question really is that how do you foresee business to be carried out? How much of your sales are you expecting through your retail outlets? Of course, there'll be some cash flows in and out of that retail as well, because there'll be a kind of a different business because you are retailing in that case. On the other hand, of course, you also have the assembly of these goods, which you are retailing through other, various sources through. Can you tell us about what and how this could potentially pan out for Stovekraft over the next 6 months? And what is the plan maybe 3 years down the line?
So retail is like what you understand is a little different for us. We have capped the company-owned, company-operating stores at 171, which was the beginning of last year. Every quarter, we open between 25 to 30 new stores, and we moved to a different model, that is company-owned and franchisee-operated model. So there is no cash outgo in the expansion of the stores. So on an annual basis, you will see closer to 100 stores every year. So next 3 years, you will definitely see 300 stores from the current 200 odd stores that we have. So retail is a high growth growing channel for us, and relatively higher gross margin also.
Just one question I had, Mr. Gandhi, is one on inventory as well. We have seen that inventory is slightly higher in this particular year as well. In the first half as well, we've seen any kind of commentary that you can offer us on inventory?
So we actually, while we grow on our revenue, obviously relative terms, the inventory grows. But if you will see, there is a huge improvement on our working capital days. We have come closer to 42 days of working capital. While our endeavor is to continuously reduce this, but there is a huge positive growth on our working capital. We are cognizant of this matter, and we will continue to improve our working capital days.
Just one more question I had. I did come across in your presentation about the Pigeon LED segment that you had entered manufacturing in 2019. Anything that you can talk us through, any kind of quantification that you can give us for this segment?
This segment is continuously witnessing devaluation of value in each on a SKU level, and though we improve our volumes, the revenue growth is not as in line with the volume growth. So while we continue to be in the segment, we are not our energies are not we would invest more on our core categories of cookware and appliances, and this segment remains as it is. We are not seeing very high growth in the LED business.
Rajendra, if you can also give us an idea about whether or not you're looking to raise funds in order to, perhaps put those and allocate those funds towards any sort of expansion towards manufacturing or retail. How are you looking at things over the next few quarters?
The company is well capitalized, and in fact, we are moving towards a zero debt. That's the way forward for us. And there is for our expansion plans, there is enough cash flow that the company generates, and we generally have not been borrowing for any of our capex. Even in the future, we don't intend to borrow. So at the moment, considering that the company is generating enough cash, we don't have any plans of raising any capital at the moment.
Now, Mr. Gandhi, just one clarification. At the start of the interview, you did mention that, and if I heard you correctly, please correct me if I'm wrong, retail channel has been growing faster than e-commerce. Is that what you said?
Yeah, because of the small base, so currently it is contributing to 4% of our revenue. When we started the year, we were at about 2% of revenue. As we grow in the next, say, 8 to 10 quarters, definitely this will move towards a 10% contribution to our revenue. So in terms of growth, the retail is the largest.
How do you see this contribution of e-commerce moving forward as well? Maybe in the next 12 to 24 months, what's the outlook there for e-commerce segment as a contribution to total revenue and sales?
We are in the range of between 30 and 35%. So as the company grows, maybe sometimes the e-commerce channel is growing faster. So we'll be in that range. For the overall revenue, e-commerce will continue to contribute around the 35%.
Okay, well, Rajendra, we leave it at that. Thank you so much for joining us and giving us so much clarity on the business and what we can expect going forward. Wish you the best, and of course, season's greetings to you as well.